your daily source of news and analysis on the cryptocurrency markets. Today we're going to talk about the recent drop in the price of Bitcoin and how short-term holders are panicking and selling at a loss. As you may know, Bitcoin has been on a roller coaster ride over the past few months. It reached an all-time high of over $64,000 in April, but has since lost over 50% of its value. In fact, just recently, Bitcoin dropped below $29,000, a level not seen since January 2021. This drop has caused panic among short-term holders of Bitcoin, who are selling at a loss. Short-term holders are those who have held Bitcoin for less than 6 months. They make up a significant portion of the market and are known for their tendency to panic sell during price drops. Why are they panic selling? So, why are short-term holders panic selling? Well, there are a few reasons. Many of them bought Bitcoin at a higher price and are now seeing their investment lose value. This can be a scary experience, especially if they invested than they could afford to lose. There is a lot of negative news surrounding Bitcoin right now. Governments around the world are cracking down on cryptocurrency exchanges and mining operations, and there are concerns about the environmental impact of Bitcoin mining. These factors have contributed to the negative sentiment around Bitcoin and may be causing some short-term holders to sell. There are fears that Bitcoin's price could continue to drop further. Some analysts are predicting that it could fall to as low as $20,000 before rebounding. This uncertainty is causing many short-term holders to sell before the price drops further. What does this mean for long-term holders? So, what does this mean for long-term holders of Bitcoin? Well, if you believe in the long-term potential of Bitcoin and are willing to hold through the ups and downs, then this drop in price could be a buying opportunity. Remember, Bitcoin has gone through many price drops in the past and has always recovered. If you're a long-term holder, it's important to stay focused on the big picture and not get too caught up in short-term price movements. As the saying goes, time in the market is more important than timing the market. If you're able to hold through the ups and downs, you may be rewarded in the long run. The recent drop in the price of Bitcoin has caused panic among short-term holders who are selling at a loss. However, for long-term holders, this could be a buying opportunity. As always, it's important to stay focused on the long-term potential of Bitcoin and not get too caught up in short-term price movements. China, which is one of the world's largest markets for cryptocurrency, has recently intensified its efforts to shut down Bitcoin mining operations in the country, citing concerns over energy consumption and financial risks. This has caused a significant drop in Bitcoin's hash rate, which is a measure of the computing power being used to mine Bitcoin. Another factor is the increasing focus on environmental sustainability in the cryptocurrency industry. Bitcoin mining is an energy-intensive process that requires massive amounts of electricity, leading to concerns that are more energy efficient. In addition, there is growing regulatory scrutiny of the cryptocurrency industry, particularly in the United States. The Securities and Exchange Commission, SEC, has been cracking down on cryptocurrency-related scams and fraudulent activities, and there is growing pressure on cryptocurrency exchanges to comply with existing regulations. All of these factors have contributed to the negative sentiment around Bitcoin and have caused many short-term holders to panic sell. However, it's important to remember that the cryptocurrency market is notoriously volatile and price swings of this magnitude are not uncommon. So, what does this mean for the future of Bitcoin and the cryptocurrency market as a whole? While it's difficult to predict the future with certainty, there are reasons to be optimistic about the long-term prospects of Bitcoin and other cryptocurrencies. One reason is the increasing adoption of cryptocurrencies by mainstream financial institutions and corporations. Companies like Tesla, Square, and MicroStrategy have all invested in Bitcoin, and many others are exploring ways to incorporate cryptocurrencies into their operations. This increased adoption could help to stabilize the cryptocurrency market and lead to greater mainstream NFTs, which are both built on blockchain technology. DeFi applications allow for decentralized financial transactions and services, while NFTs enable unique digital assets to be bought, sold, and traded. These emerging technologies could help to revolutionize the way we think about finance and ownership, and could drive the next wave of innovation in the cryptocurrency industry. In conclusion, while the recent drop in the price of Bitcoin may be causing panic among short-term holders, there are reasons to be optimistic about the long-term prospects of the cryptocurrency market. As with any investment, it's important to take a long-term view and not get too caught up in short-term price movements. By staying informed and focused on the big picture, investors can make informed decisions and navigate the volatility of the cryptocurrency market. That's all for today's video. Make sure to subscribe to Bitcoin Dorks for more daily updates on the cryptocurrency markets. Thank you.